What's different about this is that silver set up a different kind of continuation pattern to gold. It also had its worst sell-off in the first stage of selling off. In terms of gold, it had its second stage sell-off was worse. I still think silver is one of the finest sweet spots in all the markets. Silver is the best market for me. So you are in a period now where you are moving out of a falling wedge. And that's inherently very bullish, and that's a triggering event for us. There was even a gap in there, but since yesterday was a fabulous day in terms of percentage, we're now seeing reassertion and a degree of momentum picking up. And I want to highlight that you sold off there on gold, but this was a far more intense and bigger and deeper sell-off for silver. So it's a triggered pattern that was a compression pattern, while gold is still in range of a broadening pattern, both of which are continuation patterns for upside in due course. So even though gold is lagging, we're not bearish gold.
Start off with silver, as we've seen silver have a bit of a pop here, back above $80, now slightly below as we record this on April 15th today. But your take on where we are? A lot of people have been kind of shaken out of silver or concerned over the last couple months as we've fallen all the way from 120. Where do we stand right now?
I think it's looking great, and let's show you the chart, because essentially this is a chart thing. I also want to highlight the slight difference between silver and gold, and we've been exemplifying why silver first, and that's quite non-standard. So typically in the beginning of bull markets, before we pivot to the charts, you wait for gold to move first. And gold must move first, then silver follows, then starts to out-accelerate, and then you get this corrective period, and often many people would think that you would wait for gold to start the next stage when you have something of a meaningful time frame correctively. What's different about this is that silver set up a different kind of continuation pattern to gold. It also had its worst sell-off in the first stage of selling off, whilst in terms of gold, it had its second stage sell-off was worse. So I'm describing a lot. Let's show you because it's actually beautiful to see. I've got silver up here. Let's go and do the share screen.
What stands out here is not silver bouncing above $80, but the unusual fact that silver is moving before gold confirms the broader trend. As Francis Hunt points out here, that reversal challenges the normal sequence investors usually trust during a metals bull cycle. Silver dropping from $120 to near $80 shook out weak holders. Yet that volatility can sometimes mark stronger hands quietly taking control. When one market stops following old behavior, it often signals a deeper shift underneath sentiment. Next, Francis Hunt discusses why silver's chart structure may be telling a very different story than gold right now.
So start with silver, and then I'll show you how they were different later, because it can get a bit complex when you're having two charts at once. So here's the silver, Elijah, and this is why we liked it. That's a falling wedge. We really like that for continuation because there's a squeeze component to it. Here's the falling wedge. It's capturing the highs, and it is called a capping descending grind line by our maxim in theology and lexicon of language, I suppose. It is one element of a falling wedge. We also include a splitter, which actually aggregates the aggregate descent for the period since the blow off high, which was 121. This is called the capping descending grind line because you get sold off at the key points across the top. It is descending of nature, and it's capping, it's across the top. And what we have had recently is you had that lovely little hammer. You had it leaning against that, and then we broke out of this. So you are in a period now where you are moving out of a falling wedge. And that's inherently very bullish, and that's a triggering event for us. There was even a gap in there, by the way, from the open to the close. You did go up a lot higher, and then you got a little bit pushed back. So you do have that return move. You can see you came down back to a low over there, and you've revisited it again there.
Many investors miss that price patterns often reveal stress long before headlines ever catch up. As Francis Hunt points out here, a falling wedge after a sharp decline can signal that selling pressure is running out rather than accelerating. The rejection near $121 created a ceiling, but the recent breakout above that compression zone suggests buyers are starting to absorb supply. Even the pullback after the gap higher can be constructive because strong markets often retest before continuing. Next, Francis Hunt shows why silver's breakout looks stronger when it is compared directly against gold's slower pattern.
But since yesterday was a fabulous day in terms of percentage, we're now seeing reassertion and a degree of momentum picking up in terms of all of that. So, yeah, this is very positive. Falling wedge, a breakout. Now, if I just bring gold into the equation and I put them, I'm going to split the screen so you can see them side by side. It does mean they shrink a little bit, but if I just put gold in here, and you will see that there was a slight difference to how they sold off. This is with the same broker. Let me clean that face out there and move it across. So we just see this corrective period. I'm going to try and broaden, get as much real estate as we can here. So what you had with gold was slightly different. The broadening structure goes like that. It's not a falling wedge. It's a broadening structure. That means you keep getting wider. A falling wedge has constriction in it, which is compression, which is also what gives you the move. It gives you the heads up for the break a lot sooner. Whilst this still has to be broken before gold is in a full break. So gold's got to toil its way across a much longer distance.
The real message here is that silver may be signaling strength while gold still looks undecided. As Francis Hunt points out here, silver compressed into a tighter structure, while gold expanded into a broader and less stable pattern. That matters because compressed markets often release energy faster, while broadening patterns can trap investors in false optimism for weeks. Gold still needs to prove itself, and without that confirmation, some traders may be reading too much into silver's early move. Next, Francis Hunt unravels why the depth of each sell-off changes how investors should read both metals now.
And I want to highlight that you sold off there on gold, but this was a far more intense and bigger and deeper sell-off for silver. I'm just going to throw some numbers on that for you just so that it's not hearsay and visual effects. If I just grab that, the percentage downside, you would expect it to be higher for silver on a down leg, was 47%. You were almost half. Gold, however, and we often talk about it having a lower beta in the tricky times it's better to have, was 21%. It's a big difference in 47 and 21. However, what I would highlight is that gold almost had a deeper dip second time around. The second time it fell 24%. So the acceleration part 2 was higher on the sell-off. Silver had sold off 47% the first time, and in its second sell-off was at 36. So it was already reducing, dissipated. It's still a higher beta. It's still more than gold on the second leg, but it was already showing signs of reduction. This is why we have a broadening structure on gold, and we end up with a constrictional structure on silver. And this is why silver has given an earlier potential break signal, and why it's also been outperforming against gold recently. So it's a triggered pattern that was a compression pattern, while gold is still in range of a broadening pattern.
The numbers here matter more than the emotion, because volatility often hides the shift happening underneath. As Francis Hunt points out here, silver fell 47% on the first decline, while gold dropped only 21%, showing why silver feels harder to hold. What is easy to miss is that silver's second decline eased to 36%, while gold's worsened to 24%, suggesting silver's selling pressure may be fading faster. That subtle change can sometimes mark leadership before most investors notice it. Next, Francis Hunt discusses why that relative strength could matter more than the headline price itself.
Both of which are continuation patterns for upside in due course. So even though gold is lagging, we're not bearish gold. We just think it's got to lumber its way across to the other side here. It might have some reaction once it's above the fives, and then it breaks this capping, descending grind line that is the top part of this broadening structure that we've drawn for you over there. So you can see one's a megaphone, one's a falling wedge. So silver is the dominant, is the better mover for now, and we're in a reflation, and that's quite non-standard, but I will say here's why I think it is that way. We are now deep in a bull market. The need for most people to realize it's a bull market is less there, although there's some burnt hands following the sell-off there. And as a result, silver is also more in short supply, I imagine. Getting the supply at these prices is far harder. So for some fundamental reasons, it's going to overperform generally for part of the reasons we have always understood that we've discussed many times before. Undersupply, overconsumed, inventory drawdown, etc., etc. Gold doesn't have that same degree of fundamentals that go with it. So that's a fairly comprehensive answer to your question.
The market rarely tells you when scarcity starts becoming more important than sentiment. As Francis Hunt points out here, silver is now behaving like a metal with tightening supply rather than just another speculative trade moving with gold. That distinction matters because physical shortages can quietly change price behavior long before mainstream investors notice the shift. Gold may still confirm later, but silver, leading inside a reflation phase, suggests institutional money could already be repositioning under the surface. Next, Francis Hunt discusses why even a bullish setup can still leave room for one final shakeout before the next move higher.
I hope I've encapsulated everything you were looking for.
A lot of people are expecting further downside in silver. You mentioned how it's really breaking out at the moment. Do you see a good possibility of potentially another sell-off here?
So whether it's my primary case is one thing. I'm not so sure. I am keeping an open mind to the fact that there might be a retrace. And one of the reasons is we expect 3 waves of selling typically in this instance. And there were your 2 strikes. So we've had 1 and we've had 2. These might be a tiny bit small to be truly reflected, or they're sufficient. It's a bit difficult to tell. And within that, when I draw how we are working out, we are potentially still in a bit of a rising wedge. We might be a bit of breaking out of that, but we might be in a bit of a rising wedge over here. So sometimes it's possible that you can pull back. I would still bias to the bull scenario, and I think you've got a clean run, but not too fast, not as in the melt-up period over here. Ups, down legs, steady movement. I think we're going to get beyond 100 in this upward move. I don't necessarily think that transpires into a whole new high.
The hardest rallies to trust are often the ones that still leave room for discomfort. As Francis Hunt points out here, silver can remain bullish while still experiencing a retrace that tests conviction before a larger advance. Investors often confuse a healthy pullback with a broken thesis, especially after violent moves from $120 down toward $80. A slower path above $100 could actually be stronger because sustainable trends usually build through controlled pauses instead of emotional spikes. Next, Francis Hunt talks about why any remaining downside may be more manageable than many nervous silver holders expect.
Can you get that sell-off that you're asking about? It could happen, but I don't think it's going to be brutal because we've dissipated. The shock and the volatility has been squeezed out of silver far better than it has out of gold, because you've got a constriction pattern that squeezed the volatility out and it's sort of walked out. But there is still a possibility that you can get one more sell-off. I don't think it's base case, but it's possible. And once that's happened, I still expect you to walk out into the 100 and the previous high. I expect you'll have a localized top just to preempt any questions about where to next. I'm not sure we're going to easily just go straight into new highs. So this whole structure might require more winding up. There's a lot of things that could cause a bit of deflation and a bit of fear and a bit of hitting the sell. Not that it's silver, I feel, should be, but in due course could see it pull back from these 100s one more time, and then we create a larger continuation pattern to make the new high. So don't assume just because we get above 100, it's automatically just going to walk through to new highs.
Some of the biggest mistakes happen when investors mistake recovery for a straight line higher. As Francis Hunt points out here, silver may still face another pullback even if the larger structure remains constructive above $100. That matters because emotional buying near round numbers often creates temporary tops before a market resets again. A controlled move with one more pause could actually strengthen the long-term setup by removing weaker hands before the next leg develops. Next, Francis Hunt unravels why silver leading gold does not automatically mean the explosive phase has already started.
It can do that. Don't assume it. And there is still a possibility we can dip because we're in a bit of a channel that we've walked out of so far. I can't say anything too much more than that, apart from saying the possibility exists for that downside move.
You mentioned also how gold hasn't broken out yet, but silver has. So is that a good sign in your view because silver is leading?
The patterns are different. So the criteria needed for silver to break out was far less because of the constriction. So we might be looking at something that is just mild bullish recovery, but because of the pattern, it's a walkout break, whilst you still need gold. Gold is the king of precious metals. We can't ever ignore that fact. And it's still in range in its pattern and has got to walk its way out to the high side there for a bit longer. So that's why I don't think you're going to get the extremity of fireworks that you came into this pattern structure with for a while, because you've not got gold making new highs also yet. That's going to take a bit longer. So I don't know if that part answers that. Gold's got a bit more to do before it's joined the party, and they'll run better together. And gold's just deep in range. Not many people getting unduly excited by gold because it's just steadily working its way back. The smart people are noticing, you and I are noticing as precious metal heads, but the markets and the average Joes are not. So we're not going to get the headline grabbing moments just yet.
No, a lot of people watching right now were probably accumulating silver because it was so undervalued around the $20 range, or in the mid-20s, mid-30s. As we've seen, it was just there a couple of years ago. Now they're seeing $70, $80 silver. And I guess probably asking the question, should we continue to accumulate here? Is it still, one of the best, undervalued assets? Or is there something else to look at right now? What would be your opinion on that question?
A market can look strong while still missing the confirmation that serious investors wait for. As Francis Hunt points out here, silver may be leading, but gold still has not delivered the broader breakout that usually validates the entire metals trade. That gap matters because many false rallies begin with one asset running ahead while the rest of the sector stays quiet. Retail buyers often chase the visible move while institutions wait for stronger confirmation from the larger trend. Next, Francis Hunt discusses whether silver still deserves fresh capital after climbing far above its old $20 accumulation zone.
I still think silver is one of the finest sweet spots in all the markets. Silver is the best market for me. We've just had the most unbelievable purple patch from September, the breakouts of September of last year, right the way through to the end of January of this year. And we were fortunate enough on XAG to have got out at around the 111. So we didn't ride the elevator back down. And even for those that at an investor level did, your lowest point was $61. And for us, the bull period started at 25.9. So you should be already well beyond 3 times at the lowest point. And of course, we're already back at 80 at the moment. We've traded 81. So as investors, people should recognize this. And I have continued, particularly during this period here, to add at an investment level aggressively, So I would suggest that's a good line of investment for people. For active traders, you have to be a tiny bit more selective, and that's why we are fascinating about whether there can be another pushback. This looks like, however, a good reversal, and you've triggered the falling wedge breakdown. There's a slight question of, have you had a deep enough dip as a return move, or have you had a deep enough of the third selling offs that, like we had the clear 2 there, they're always more subtle on the third impulse. And you can see you had a rejection on that candle. You then had quite a deep dip on that candle. You had an in-between low range candle on that day, and then you had another hammer dip. So there has been some sell-offs in that. The question is, Did we let go of everything we needed to? And are the fundamentals of the market starting to come through as people are needing to find inventories for silver? And is that the driver behind the technical move up? I'm biasing bullish, and I am long silver at the moment, and short Brent, by the way.
The most revealing detail here is not the bullish view, but the discipline behind the timing. As Francis Hunt points out here, exiting near $111 and re-entering after the drop shows the difference between conviction and blind loyalty. Many investors hold through every swing, but protecting gains can matter more than simply being right about the long-term story. With silver rebounding toward $80 after bottoming near $61, selective positioning may now matter more than aggressive chasing.